Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. How's it going, Don?
Hey, John. Good to be back. Let's do another show.
Great. Yeah, we're both fresh off conferences here in May since our last recording. I hosted a conference at the Four Seasons Fort Lauderdale in May. That was quite successful, and then flew to Atlanta and did something there. Apparently, for the first time in many years, that market hasn't seen a conference in the mining sector since really the 0809 crisis of any size. So that was pretty cool to do. And you were up at MIF in Canada, correct?
Yeah, first time I spoke at the Metals Investors Forum in Vancouver. Got to experience that. It was a good time. That's available, by the way. My presentation's available on YouTube. You guys can hunt it down.
Okay, so probably like keywords, just your name and MIF.
Yes.
Okay, great. So in about 10 minutes, we're going to introduce Chris Gertyson, who is the CEO of Nova Minerals, ticker in the US NVA. It's one that I'm interested in hearing about because I own a lot of gold equities as well as antimony equities. We started looking at antimony about 2.5 years ago. And what really caught my attention there, Don, was Morgan Stanley, which was one of my biggest clients, talking about Perpetua, PPTA, 2 years ago in an article in April, I remember almost to the day. And I was shocked because, Morgan doesn't really go out on a limb on critical minerals. And that really got my attention and got me to thinking about broadening my portfolio more into critical minerals if someone like Morgan was doing the same. So we're going to hear from Chris in about 10 minutes. They're in Alaska, which is getting a lot of attention under the Trump administration, as you know, with Trilogy, Northern Dynasty, a bunch of names, Contango Ore, all doing quite well if you look at the one year charts. So, Don, before we get into that, let's talk a little macro. You and I have been talking about, the broad market continuing to do well here, and you had thought probably by May, maybe June, we'd see some type of pullback, but Trump keeps doing things a la the European tariffs, and then on a long weekend saying, no, I was just kidding. We're going to pull those back. And then you see a huge rally, the following day when the market reopens after a long weekend. And is some of this like smoke and mirrors in your opinion? Is this sort of like him just trying to get the market higher and make, himself look like this is a lot of his work, or what is your opinion there?
Well, first of all, I find it unbelievably fascinating the period that we're in right now. And we haven't had a recession since 2009. We've been manipulating the currency. I mean, they've had this ZERP since 2009. They've been, the Fed has been trying to have this dual mandate of controlling prices, full employment. But in tandem with that, they've also been trying to keep the stock market strong and keep the dollar. They've been basically, the Fed has kind of taken over ownership of the economy in many respects. And it's gotten really, I mean, if you do any historical reading and kind of know it, if you go back and you look at how this is all unfolded, I mean, this is really, really kind of, I mean, it's getting really interesting as far as, what comes next, if you will.
Right.
Some people think, we're just going to keep going, 2009, no recession. Don't worry. We're not going to have a recession this year. I'm kind of in the Jim Rogers camp. We've never had, this has never happened before. If it's never happened before, don't expect it to continue. I'm totally in the Jim Rogers camp in that regard. My feeling is that the stock market cannot go up much more. I mean, if you look at earnings, I don't see earnings catching on fire. The one thing about Trump and his tariffs is the tariffs are not going to go back to 2.5%, which is where they were when he got into office. 2.5. So basically, the U.S. was an open market for everyone. And Trump's going to raise that up north of 10%. The big beautiful bill had an estimate of 15. I think it's going to be somewhere between 12 and 15. So that's a big jump in tariffs, and it's a tax. So the economy was already slowing, and then Trump's coming in here with these tariffs. Now, yesterday, this court that nobody had ever heard of, I'd never heard of it before. Who knew that there was a federal court for trade, right? I never heard of it. They came out with this ruling that Trump can't do some of these tariffs. But what people don't realize is that Trump has many different types of tariffs that he can implement. So tariffs aren't going away. Tariffs are not going away. And so I think that Trump is going to pull us into a recession. And when he does, I'm expecting gold and silver to get hit. I think we're going to have another leg down. If we go into recession, we're talking about a crash in the stock market if we go into recession, bottom line. And I think that's what's coming. I think we're going to get a crash in the stock market. I don't know when. I think the next 90 days, but people give me a bad time saying, Don, you're always saying this, and I hate to get stuck in that, but that's how it feels to me. It's like it's right around the corner. We're close. Okay. The miners are out of the channel from hell. The channel from hell is the HUI. So we've been in this HUI channel since 2013. Went into the channel in 2013. We've been in there ever since. Now we popped out of it a couple times, and we went back in. Now, right now, we're out of the channel at 397. Recently, we were back under it. The top of the channel is 365. I think we go back into that channel again. I don't think we're out of the channel. I don't think, the breakout in the gold and silver miners, I don't think it's going to happen until after the stock market crashes. That's my feel. I think we're trapped here. I think gold's trapped, silver's trapped, the miners are trapped, and they're not going to do anything until this market rolls over.
But wouldn't you agree that there's some pockets of strength here? Because when you look at earnings, right, like not everyone in GDX is, producing names that are mid-tier or larger are doing well, right? But there are ones like Alamos and Kinross and Agnico that have done very well. And so to me, this is more of a rifle market than a shotgun market, right? Where you can just buy everything like you did in the first half of 2016 and do quite well, or, post-COVID in 2020, right? I mean, you could really get a directional move in many, many names back then, if you remember, right? So we're not there yet, but I feel much more confident every week that passes because we're not giving back in some of these names. Like if you look at the royalty space, which as you and I both know, is one of the most conservative areas of the mining space, you've got names like Vox Royalty, VOXR, cranking here. They just got added to the Russell. You've got Sand, SAND. I just looked at it today, 2.5 3-year high. Looks like it's going to break out. We're seeing some of these mid-tier kind of names that aren't huge market caps, right, but large enough, start really doing quite well that aren't necessarily like super risky like explorers.
Right. So the HUI was at a bottom last February, over a year ago. It was trading under 200, and now we're at 400. So it's a 100% move. So a lot of people, they look at the chart over the last year and they see all these, a lot of stocks are up 100%. What they don't realize is that run was actually a retracement, if you will. That's and true. A lot of these retracements are not back to where they're supposed to be. I mean, if you look at Newmont was at 82 in 22, and it's like under 55 right now. Hasn't even come close to retracing. But a lot of the stocks have retraced, some of the better ones. So you have a handful of names that have done well. Now, I think it's a combination of stocks. The last 12 months, a lot of these stocks have done well because we were trading down at 200 on the HUI, and so you had this opportunity to make a big run. But another thing that people are looking at is gold. You have these huge margins. So right now, the average margin is over $1,000 an ounce, which is huge. You never had margins this high. So people are noticing the margins, and they're like, I want in on this. But simultaneous to that, they're a little nervous because they don't want to get the rug pull there. And then simultaneous to that, you have silver. If you look at the silver chart looks great. I mean, it looks like it's been creating this base between 30 and 35. And it looks like, it looks like it's going to rip. It's going to get through that 35. And then once it gets through the 35, it goes to 50. So you have silver close to breaking out. You have gold with $1,000 margins. And so everybody's starting to get this feeling that we're close, we're close, we're close. And I agree, we are close. But for me, I want 5 and 10 baggers. I want gold to go to $5,000. So that's for me, that's something important. I don't care about the next 12, 24 months, 24 maybe, but I'm really looking out, 24, 36 months. Because in order to get that 10, I want that 10 bagger. To get that 10 bagger, it's going to take more than 24 months, in my opinion. We could get really lucky in 24 months, but 12 months, forget about it. I don't care about the next 12 months. But a lot of people, they're conditioned to think in terms of quarter to quarter, year to year. That's just how they think. But as a speculator, I don't think that way. I think 24, 36, because I'm after 5 and 10 baggers, and those don't happen overnight. So I'm looking for the setup that makes that happen. That's where I'm coming from. That's how I focus. I'm focused, how do we get there? And so how do we get over $35 silver? And then I think that's the key to it all. If you can get above $35 silver, I think the HUI will get above 450. Once the HUI is above 450, I think we're going to have a massive run. Massive. I'm talking 450 to 1500 on the HUI. And that's, for me, that is the big breakout. That's going to be the equivalent of when silver went from 2000 to 3500 in a year. To be that type of equivalent move, but it'll be more leveraged because silver is going to move even faster.
It'll be much more leveraged, yeah, because when you and I both like Aftermath Silver, AAGFF, and if you look at the drill holes they just put out a few days ago, I mean, the stock was at 32, 33 cents. It rocketed to 41 cents US in 3 days. I mean, that's the power of, and they've got more assays pending, by the way. They're cashed up. They're putting out good drill results, but they're a developer, right? So like even though they're a developer, they're still putting out good drill results, which I love. And they're showing off that, hey, we're not just a silver play, we're a copper play and a manganese play too. So they can pivot into other things down the road, which is, keeping people interested. And Eric Sprott, by the way, I picked this up at my conference. I went up to the founder of Aftermath and I said, hey, Eric's got about a 25% position on the stock now. Like, how many stocks does Eric have a 25% position on in general? And he said under 10. So, I mean, that's a pretty nice endorsement right there. But moving on, let's talk a little bit about Bitcoin, because you and I rarely talk about this, but you and Larry Leopard, who you partner with, as an analyst, you guys both made a great call on Bitcoin. As far as mining stock guys go, a lot of people in our sector shun that area, and you guys didn't. So there's been one that I've been looking at, and I'll mention it now. And you can take a look at it with Larry and let me know on our next show. We've got something going on next week, but it's called Next Gen Digital. And the reason I like it, it reminds me of like a Coinbase equity type play with smaller crypto names. Like you had told me about Solana 2 years ago when we had lunch, and I've been tracking that. And this particular stock, has a lot of exposure to Solana and some other names in the crypto area. So, what do you think is the prognosis for crypto here? Can it run alongside of gold? We get that question, you and I, all the time.
Yeah, so I was a computer programmer. I came out of college, and my first job was a computer programmer for 5 years. And I did a lot of coding after that, but I wasn't a full-time programmer after that. But I had basically a technical background. I worked in IT for 20 years. And so in 2016, Bitcoin went to $1,000. And I was ignoring it, saying nobody can make private money. This is all BS. I mean, that was my mentality, that it was a nothing burger. Then went to $1,000. I'm going, what the heck? and then I go, okay. And I basically, from that point forward, I started watching it. And then it crashed from 1,000 down to 100. And I thought, it's dead. It's dead. It's going to zero. That was a flash in the pan. And then it started trending back up. And it got to 400. And I thought, I better look at it. So this is in 2016. I went and looked at it, and it blew my mind. And to this day, I've never, after doing that, I spent 100 hours. I spent an entire day just looking at how they solve the double spend, how they do transactions. And I was just shocked at how elegant it was. As a computer programmer, how elegant this code was. The thing is literally, it self-fixes itself. It's like AI software. It's called anti-fragile. It's like you can't kill the thing. They call it the honey bagger. So it's secure as hell for number one. Number two, it's totally decentralized. Nobody can screw with the thing.
Right.
You can't turn it off. And the third thing is the halving. So it's literally built in. So every 4 years, the amount of Bitcoin that gets mined gets cut in half. Whack every 4 years. So if you value it on a 4 year basis on that halving, anybody that's bought Bitcoin since it originated, 4 years later, it was worth more than they bought it. So if you think of it as a 4 year cycle,
Okay.
if as long as that 4 year cycle maintains, so in other words, if you buy it today at 109, in 4 years it should be worth more than 109. That is always held. That 4 year cycle is always held, and usually you do a lot better than just go up. But at least from a store of value standpoint, now I haven't done that inflation adjusted, but the 4 year cycle is held. I'm not more bullish than I was then. I mean, basically, I bought it $400, so I have a 200 bagger, and I haven't sold any.
And that's your initial entry point is $400.
Yeah, I bought it at $400. I'm like, this is crazy. I mean, and I was telling people on my website to buy it. Only one guy did, and that guy, he bought it, like double his money and sold it. And most people nobody got into it. I was telling people on my website from 400, I did it all the way up to about 10,000, and I stopped telling people to buy Bitcoin. But I was more bullish then. I was just as bullish then at 400 as I am now, because nothing has changed. Like everything I just explained about why Bitcoin is going to go higher, it's still in place. The only really risk to Bitcoin is quantum. The biggest risk to Bitcoin is quantum computers. What people don't realize is that Bitcoin has a unique niche. Niches are powerful. They're very potent. And the niche that Bitcoin has is you can't copy it. And the reason why you can't copy is you can't copy the governance model. So the way that Bitcoin was created, nobody's even tried to duplicate it because it's just insane. So the way that it worked was Satoshi, he basically created these two software programs. One is the mining and the other is the nodes. So there's two software programs, the miners and the nodes. And it's open source and anybody can download it. Anyone can. But the only way you can update it is through consensus, 51%. That's why it's kind of controlled. But it took to secure it, to secure decentralization takes time. You can't do it overnight. So it took about 5, 6, 7 years of before it was truly, secure, if you will. It took time. And so nobody wants to. So when you've initially released the software, first of all, you got to get people to use it. So the security comes over and over time. And nobody's ever tried to duplicate that type of decentralization where there's no business, there's no foundation, there's nobody supporting it. It's just all on its own kind of thing. Bitcoin was literally on its own the first 5 years. And it survived somehow it survived. And now it's secure as hell. And there's nothing really going to stop it from going up, 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 except for quantum computers. Quantum computers is the one risk. And so they're going to have to come up with some way, because the way that Bitcoin is designed is they have something called a master key. And the master key there's all this elegance of this software. The master key is 12 or 24 words, and those words are in a certain order. And it's almost impossible to guess those 12 words in the right order. But a quantum computer could possibly do it. And if you can recreate your wallet just by using these words. So in theory, the quantum computers can redo your wallet. And once they redo your wallet, they can steal all your money and transfer it to another wallet. So that's the risk. And I don't think quantum computers are going to do that anytime soon, but maybe in a couple of years, that could be the end of Bitcoin through quantum computers. But other than that, my target price is $1 million, and it wouldn't shock me if it goes higher than that, which is absolutely, it's kind of bonkers. People think it's out of thin air. They don't realize that what it can do, the ability to transfer ownership is very, very valuable. Bitcoin's the only software program that can do that, to transfer ownership of a file to one person. It's like it's in a wallet, it's on a ledger, and I can transfer that to you, and now you can own it. Most people go, that doesn't mean anything. That's not worth anything. Well, trust me, it is worth something. We don't know what it's worth, but it's definitely worth something. The ability to prove ownership has value, and because it's a type of money, and so people are saying it has no value. Yes, it has value. The question is how much value. And like I said, it has a niche because you can't copy it. Bitcoin is an animal all into itself. The one thing that I said early on was that Bitcoin is a collectible. I said this back when I first did the research, 2016. You can't spend it. It's stupid to spend it. I've never spent it. I never sold it all. The reason why is because it's too darn valuable. You have to hold it. So it's like gold. You buy it, put it in a safe, and you forget about it. And so from that standpoint, nothing else is like that. Now, all the other alts are software programs. And I like those better because all those alts is what's going to create the future. Bitcoin isn't going to create the future. Bitcoin is just a ledger. It's just sitting there. It's just this unique animal. But all the alts, all these new applications, those guys are developers. They're inventors. They're creating the future. And I'm very excited about the alts. I actually have not bought any Bitcoin after it was at $1,000, which was not very smart on my part because it went up 100x. But I started buying,
at least you put a position on.
I started buying alts because I thought that they would outperform Bitcoin. But that was one of my mistakes. I should have realized, okay, Don, your target was $250, and my target was $250,000. So your target's at 250 bagger. And you're going to go buy alts? In what world does that make sense? So I was kind of an idiot. But the reason why I stopped buying them is like, I don't need any more Bitcoin. I got enough. So I stopped. It's like, I don't need any more. Right. If it's going to go to $1 million, I got enough of them. And so it's like, so I started buying the alts. But I wanted to support the alts because I think the alts are the future. I really do. Like, for instance, right now, Apple and Google, the Apple and Google store, if you're a developer and you want to put an app out there, you have to go to those two. Well, guess what crypto can do? Crypto can create this Web3 where you can run an app directly on the internet. And you don't have to go through the app store. That's what crypto can do. And it's in its early days, but eventually that's what's going to happen, is that we're going to have this Web3. So the internet was always supposed to be decentralized originally. But guess what? The internet isn't decentralized. Google, right? Google has a monopoly. Facebook has a monopoly. You have all these monopolies on the internet. Google has it, Amazon. I mean, well, it's not very, the internet is not very decentralized, is my point. Well, guess what crypto does? Crypto decentralizes the internet. The other thing is the other thing that crypto can do, this is why I'm excited about crypto, is crypto can secure our identities. Everybody steals your identity. The other thing that they can secure your website. So right now, a website, they can lock down your website, right? That happens all the time. They'll hack your website and it's locked down. Well, with Web3, you can decentralize your website, so you can't shut it down. In other words, you can't shut down Bitcoin, you can't shut down your website. So crypto has tons and tons of potential, if you will. So the fact that people don't like crypto or they don't like Bitcoin, they do it for the wrong reasons. I think for me, it's all about freedom and innovation. It's the future. I'm very excited about it.
That's great. What a great analysis. Thank you. Why don't we talk more about this next week when we get together again? Check out that stock for me, Next Gen Digital. The ticker in Canada is NXT. Because I might be wrong, but I think it's got potential. It's trading under $1, well under $1. And so when I look at stuff like that as an equity guy, I get excited. So that's a perfect transition to introduce our guest today from Nova Minerals. The CEO is with us, Chris Tyson. Chris, welcome to the show.
Yeah, great to be with you guys.
Hey, Chris, welcome.
Yeah.
You know?
So, I mean, as Don was just talking about crypto and challenging yourself, challenging your knowledge base. I did that 2.5 years ago when I started to see Morgan talk about antimony and critical minerals more. It was fascinating to me that they would go out on a limb like that. And here we are today with many stocks like yours, Perpetua, Mandalay, all doing well with that kind of gold and antimony combo, if you will. And the fact that you are in the U.S. is really compelling, I think, given Trump's EO in March. So why don't you give us maybe an 8 to 10 minute overview, Chris, of Nova, and then we'll ask some questions.
Sure, that sounds good. Yeah, it's a very exciting time for our company. I mean, we're dual listed now. Last year we listed on the Nasdaq as well, so we're listed here NVA in the States, and we're also become a dual commodity company. So we've always been, a gold company. We've been working our project here, the Estelle Gold and Critical Minerals Project, for about just over 5 years now, and been very successful in the gold space. But we've made very significant discoveries of the big one there is antimony. So we've become a dual commodity company as well. And then we're in Alaska. It's so hot right now. I mean, on day one, I believe the Trump EO was actually titled "Unleashing Alaska's Mineral Potential." So we're, that's us, and that's what we're doing. We're unleashing it here at the Estelle Project. And what we're sitting in South Central Alaska. We're in the Tintina Gold Province, and this has been one of the most prolific belts in recent decades. With discoveries and production, you have a lot of the majors operating here. Of course, Kinross, Fort Knox, the Barrick. Well, they just sold out of it to John Paulson there. But the Donlin Project, just to the west of us, you have Snowline there on the Yukon side, and all these, Pogo, all in the belt. So it's the land of the intrusive related gold system. That's the deposit style, and they're just 10 million plus ounce deposits, not uncommon in our neighborhood, and that's certainly what we're onto at Estelle. So it's a South Central Alaska. We're about 100 miles from Anchorage, to the west of Anchorage, and over 500 square kilometers or over 200 square miles of state of Alaska mining claims. And that's an important point. There's no federal land, no native corporation land. We're on state land. And what that means, and when it comes to permitting, it's a much more streamlined process. And the only time we have to deal with the feds is basically for our 404 permits. That's for wetlands or water impact, just dealing with the Army Corps of Engineers. But other than that, very streamlined and just day-to-day pleasant operating environment. Dealing with our state agencies are so supportive, being a resource economy up here. And now with all the momentum we're getting from these EOs in Alaska, we're certainly already seeing on the ground real benefits for some of the things we're permitting. But at the site to date, on the gold side, we've defined almost 10 million ounces of gold in the measured, indicated, and inferred categories. And so that's across two deposits, the Corbell deposit up north, which is a bulk tonnage, lower grade system. And then what's really become the jewel in the crown down south at RPM, which is a very high grade core there. So we looked at this project. It's a bit aged now, but a couple of years ago, we did a scoping study, just looking at, what if we take the whole hog here? What are we onto a viable project? Let's get a little snapshot in time. And the results were very promising, very, very positive there. At current gold prices, I mean, we haven't even done the numbers yet, but at current gold prices, we were looking at $2,000 at that stage. I mean, we did the study at 1,800, I believe, and we looked at 2,000. It was already over $1 billion NPV on that. At current gold prices, well over $1.5 billion NPV. Now, I mean, and with that study, what we see there, the price tag was about 400 million, so the capex. And so as a company, we said, well, that might be a bit hefty. And we do have the option, which is what we're laser focused on right now. We're looking at that RPM deposit and looking for a lowest capex option, trying to get something in that $100 million capex range, and going straight after RPM. We can then grow ourselves with our own cash flow into the much larger project. We're getting, really good numbers for free cash flow out of that. What we're targeting there is 500,000 ounces at 2 grams per ton, and then an internal core zone of about 250, 300,000 ounces at 5 grams per ton, getting straight into it. So it's right on the surface. And you can see with those kind of numbers where we get that cash flow, we can then expand RPM and then grow ourselves into Corbell. And that's our thinking right now. We're working on a feasibility study as we speak. It's kind of an iterative process. You know, we're learning some things going back. But in terms of timing on that, we're trying to get that out sometime next year, right? That's our goal. We'll see how this goes. We want to make it as robust as possible, tick all the boxes. That's our goal, our goal on the gold side, and we're moving forward with that. It's also exciting because we have major discoveries, we believe, of antimony, right? I mean, other critical elements. In addition to those deposits, we have 20 other known prospects at various stages of advancement. And in some of these prospects, you know, we see the gold, of course, but in some of them, coincident with the gold, we have percents of copper, hundreds, or even some prospects, thousands of grams per ton silver in surface samples, soils, and rock chips I'm talking about now, right? In some of these, and critical elements. We're really taking a holistic approach. All the assays that we do are multi-element analysis. So we're really taking a look at the whole suite of elements, especially with the big push to bring critical mineral supplies back to the U.S. We really appreciate that. And I think we've been a first mover in that space of appreciating that. We've been doing that for years now. And we're seeing many of these critical elements. And the big one there that's drawn so much interest is the antimony. So at 2 prospects in particular, what we see there on the surface is so visual, right? I mean, we have elevated concentrations of other critical elements, gallium, tungsten. And, you know, it's hard to tell right now what that means, and we're kind of honing in. But with the antimony, it's just in your face, massive stibnite veining all over the surface. And stibnite, of course, being the primary ore mineral of antimony. Now, it's drawn so much interest, particularly from the U.S. government with the drive to bring these supply chains back to the U.S. And so we've been working. I've been working on it for about 18 months now, working closely with the DoD on grant funding. And when it all started, we started talking. It was okay, grant funding, but what are you looking for grant funding? Oh, the usual thing that's in our core business, to mine it. And they're urging, they say, well, what are you going to do? Mine it, concentrate it, and do what? Send it off to China? That's not what we want. We want a company to take the bull by the horns here and give us the full supply chain. And this is what I mean by being a first mover. And so we've been working with them on not only mining it, but refining it here in Alaska. So to be the refining hub for antimony in Alaska, based here at Port McKenzie. And they love the location, multimodal port, important for their logistical redundancy on the DoD side, for that kind of things. But also there's while our project is the center of that, there's so much more antimony potential across Alaska. We were a major producer in World War I and World War II. And there's a lot of projects around Alaska that are just sitting there, smaller projects. I've had calls with a lot of these people that could come online. It creates, having a refinery here in Alaska creates an incentive for other projects to produce a feedstock, to be that hub for U.S. domestic production. And so that's what we're historic waste dumps as well have antimony, even existing mines that have just been throwing it away. They got stuff. So incentive to create a feedstock with the hub here in Alaska. Now, and so that's what we've been working on with the DoD. Now, when China cut us off, you see in the news, when China cut us off of antimony we've been, almost 100% import reliant on China. But when they cut us off from importing it, from exporting it out of China, importing it into the U.S. in mid-September last year. Now that created extra urgency, and working with the DoD, that what we've done now is they have extra urgency, particularly for the munitions product. Antimony is used in flame retardants. That's a big piece. Fabrics, plastics, kids' toys, firefighter uniforms. It goes on and on. It's used in all this kind of clean tech, high tech, green tech. Now batteries, Bill Gates and crew with the Ambry, with the liquid metal battery, antimony based. The fastest growing demand is actually solar panels, semiconductors. All these really high tech semiconductor substrates are antimony based. And so there's all those uses, but really key for the Department of Defense in particular, it's used in all the munitions, right? So all 155 mil artillery shells, all small and medium caliber munitions, even it's just stuff you buy off the shelf, just small arms. It's used in the primer, and also for some of these armor piercing munitions, and it's used to harden the projectile. And there's other defense applications, night vision goggles, that goes on and on as well. And so the extra urgency was for the munitions product, which is antimony trisulfide. And so we've kind of broken up into a phase 1 and phase 2 with our plan with the Department of Defense for this grant funding. And phase 1 is just to get the munitions. That's quite a straightforward task. That is basically stibnite, which is antimony trisulfide. You mine it, you concentrate it, you pulverize it down. There's a bit of purification. There's some military specs, but it's quite, relatively simple process to produce. And so phase 1 grant is what we're feeling positive about right now. And of course, to be clear, you don't know until the cash is in the bank, but we are well advanced and the field season is upon us right now. And so we're feeling quite positive that we will receive that phase 1 grant. And then, as we complete that phase 1, that's a 2-year program. And as we complete that, to be producing antimony trisulfide by mid to end of 2026. And then we'll go into phase 2, which is a much larger project. It'll take several years to scale things up and establish that full-on refinery there at Port McKenzie, not only trisulfide, but antimony oxide, antimony metals, these antimony compounds for semiconductors potentially there at Port McKenzie. So that's that phase 2 is our grand vision. And like I said, we've really been a first mover in that, and that's what we're hoping to do. Now, what's actually happening on the ground? So that's the vision, but what's actually happening? So we got our camp that you see behind me, 80-man, fully winterized camp out there. We're on site. The drillers are on site. We hope to have the rigs turning by next week, right? By next week. And so watch the news flow on that. What's our plan this year? So initially, right now, let's assume, before we get any news on the grant, right now, Nova Minerals, which has about $8 million in the bank, we're going after RPM. We got 2 rigs planned to be drilling RPM as what we believe will be our last drilling program before we can get out with this feasibility study. Got a few gaps to fill there and prove up and expand that resource a bit. Some exciting targets there. Also, we have an RC rig that we own, quite cost-effective drilling. And we just hired the driller. We have some exciting exploration targets there just for scout drilling to get the first drill holes into them. They're drill ready on the surface. And that includes around RPM along the ridgeline to try to intersect more of these high-grade bonanza pods. But also, it's interesting, down in the valley, there's all this eroded material filling valley fill. And you can see it with the soil sampling. It's just eroding off that RPM north zone. And it's like a snake, about 1.7 kilometers long, of all of that material laying down, already crushed in the valley, ready to dig up. So we're going to get in there and actually use our RC rig to define that at depth. And it's at least 50 meters deep. And so we're hoping to get some kind of resource in there. That anomaly is like 1.7 kilometers long at 1 grams per ton. And there's some nice 2 gram per ton bullseyes in there as well. So that's huge volume. And even if it comes in at 1 gram or, heap leach material, easy to dig. So that's big resource upside for us. That's our main plan on the gold side this year. And then with a grant, we would add an additional 3 rigs and go after that first prospect, stibium, which is one of these massive stibnite veining systems we see around the surface. Get the first holes in there. The grant funding allows us to drill. So over 2 years, we're going to drill it, come up with a resource, a mine plan by the end of the year, start procuring some mining equipment and some processing equipment, and establish that in spring next year to be producing by the end of 2026 is the goal for phase 1. So I'll leave it at that. If you guys have any questions and take it any direction you want to go.
Sure.
Go ahead, John.
Go ahead, Doug.
Okay, I'll go.
Go ahead, Doug.
No, I'm going to bounce it back to you. I'll let you go first.
All right. Well, I'll take the antimony piece, Don, and with you being the gold guy, I'll let you handle the 10 million ounces of gold. But Chris, that's what attracted me first to your stock was the antimony piece and the U.S. presence, of course. And when we first talked, you said, and you said it here 3 times, that you're a first mover in that area. Can you elaborate a little bit more on that? Like, how long have you been talking to the DoD, and is this sort of a June, July, August kind of development? Because I'm hearing more and more from companies that they are getting, DoD to really be more responsive since March.
Right. So we've been working on this for 18 months. right?
Okay.
And so it is a process. It's quite painful dealing with the bureaucracy and our federal government working at lightning speed. So we've been working on it in 18 months, and the department, the DoD was actually out here on site, and the technical, we've passed the technical muster, and at this stage, it's kind of the last bit of working on dotting I's, crossing T's, let's call it that. So there is a process involved, and so it's easy to say, I've seen some other news releases, we're going for grants. Well, good luck with that if you think that's happening tomorrow, from our experience anyway, right? I mean, there is a whole bureaucracy, and it's quite enlightening, actually. It's quite enlightening, going to DoD conferences and meeting the right people and finding out exactly what their needs are, and that kind of thing. So, and because we are, like I said, well advanced, and we have gone through that excruciating process, and I think we haven't been directly impacted by the Doge thing. However, I get the feeling that with Doge, and really the bureaucracy is doing a good job in the sense of, like, they're going by the book on all of these. They're asking questions. They're really they're really looking at these projects and making sure that the federal government will get the best bang for the buck. And I think we've been through that, and we've proven ourselves. Certainly. So when could this happen for us? I don't know. However, they know the field season in Alaska is upon us. The most productive time is now until about November for us. We could go through the winter, but we try to avoid it. Things break. It gets really cold. The fuel consumption goes up. So they're aware of that. It could happen literally maybe next week, but I'm thinking in the coming weeks. Right? I can't tell you. I don't know, but I'm thinking in the coming weeks, just knowing where we are in the process.
Fair. Okay. And I'll point out to people, Fireweed got a $35 million grant back in December, so 6 months ago, and the stock was in the high 90s. That's 90 cents, and now it's trading at $1.50 on decent volume. So it took a while, is the point, for the market to understand the significance of that. But through podcasts like this, Fireweed's owned heavily by the Lundin family. They don't do a lot of marketing, right? And so, like, it's a story that's sort of flying under the radar, which is amazing to me. That, like, as you pointed out, Chris, that China has so much dominance in the antimony space and the tungsten space. You can get on a list of all these critical minerals, heavy defense application minerals, and yet we have, like, no production whatsoever, right? So there's a lot of companies that are emerging, like yours, that are saying, "Hey, we could help." One question that you had brought up there, you talked to other companies in the region that are smaller than you that could be able to access, any type of infrastructure that you would build. Are there names that stand out to you in Alaska that you are friendly with, that you think have potential?
The ones I was referring to are patent and mining claim holders, just people, not companies, people,
Okay.
patent and mining claim holders that have been sitting on these properties for a long time. They actually inherited them in some cases. And I've actually visited a couple, and I got a couple more. And there's antimony there, right? There's some old workings and big stibnite veins on the surface. And so what I think you'll find, you can see it even in the markets in terms of companies, everybody's got antimony now. Right? A lot of people are coming out because the commodity's so hot right now. And I think over time, this antimony market, I believe, is real, right? Is real in the sense that, what do I mean by that? In the sense that, let's compare it to something like lithium, okay? Lithium. And I'm not saying lithium was real, but what we found out with the lithium is that, lithium was driven in a large part by government fiat, right? We're going to electrify the world. We're going to do this. And we found out lithium's everywhere. Whereas I think the antimony market this is real. These are, the demand is on products that is actually market driven, on things that are market drilling, high tech, munitions, national security, these type of things. So you don't have that kind of government fiat component, and there is a true shortage across the supply chain. The reason large companies don't generally go after antimony, or haven't, the market's been suppressed. They tend to be small deposits. right? They tend to be stringy vein systems. They're difficult to model. You don't know what's going to happen to the market. So you're going to have in the mining space, you're going to have a lot of small players, right? You're going to have a lot of smaller players. You mentioned Perpetua at some stage, I think, in your talk with Don. I mean, let's look at Perpetua. That's a gold project, right? That's a gold project. And, they were very, very smart, and they added the antimony component. And if you look at their resource and their reserves, I think they produce 5 to 6 years of maybe 30% of the antimony demand for the U.S. current demand. I mean, it's growing rapidly, but current demand over 30% over a 5 or 6 year period. So there's always room for other players, which is why DoD was always talking to companies like ourselves. But so I think over the long term, you're going to see some of these antimony mining side come online, and the shortage in the resources will be solved over the next 5 or 10 years. And the real bottleneck, the choke point, will be with refining if you want to do it domestically. And that's where we've been a first mover, right? By going for the refining piece that everybody else can, when these other resources come online, can go into. But similar to Perpetua, if you look at that example, they got the DoD grants. I mean, it's a great story. But, with Perpetua, just to compare and contrast a bit, it's kind of tied to their $1.8 billion CapEx gold project, right? Isn't it?
Right.
So it's tied to that. And they've, it's a gold project. And I think their total antimony there's like 0.06 or 7%. And so they are getting some antimony out, but it's a gold project. Whereas ours, and I think that's what the DoD likes, is that it's not tied to the gold project. It can be taken on a standalone, separate path. And that means much smaller capex, much smaller footprint, and much higher grades, because we're focused on the antimony, right? We're focused on the antimony, so we can get percents of antimony and the mining face. We're hoping so, rather than just having it be a byproduct, it'll be the primary product. And I should mention that first antimony prospect we're looking to get into, conservatively, it's not like an official SK 1300 resource, but we believe our exploration target there is 5,000 to 10,000 tons of contained antimony at $50,000-$60,000 a ton. Very lucrative opportunity for us, particularly considering non-dilutive grant funding to go after it. So, and I should mention also, there's good gold in that stuff too, really good gold. And so, the rigs, we will go up there, and even if we don't get the grant in due course, we want to start drilling. We might poke a couple of holes in there ourselves, right? Just to, we won't do the full program. Say we didn't get the grant, assuming no grant, we'll still go up there because there is good gold there too. So we believe that that'll add to our gold resource inventory as well. So it's a bit of a bonus there.
Okay, great. And then just one last question before I turn it over to Don. You had mentioned on phase 1 of 2, in terms of your talks with the DoD, you would have possibly an additional 3 rigs if you get the phase 1 money. What would you have if you don't get, assuming the worst, you don't get the phase 1 money? How many rigs are turning?
Right. Right now, 2 diamond rigs, 1 RC rig, with assuming no grant.
Got it. Okay.
Then with grant, an additional 3 diamond rigs. So, yeah.
Okay. Yeah, I'll point out to people again, another company that attended our conference last fall, so 7 months ago, Goliath, GOTRF, was trading at 70 cents. They got cashed up like a few weeks before our conference, and they just went for it, and they had about 8 rigs turning, and the stock doubled, because they were hitting over and over again. And in a hot gold market, that's the difference, I think, that investors need to understand. 2 years ago, you could drill the heck out of something and no one really cared, right? Now they really care because gold is over 3,000 and they're realizing, wow, this thing can really grow. So congratulations on what sounds like a great project up there.
Indeed, it's starting now. So we're coming into a heavy news flow season for the rest of the year. So that's quite exciting for the company as well.
Yeah. So let's talk a little about your gold project. So the Corbell project is definitely your flagship. I mean, it's 8 million ounce deposit, 5 million ounce open pit. That project alone is worth a lot of money down the road at a certain point whenever you get to it. That's why I met you at Beaver Creek, and you told me about, and I got really excited about the size of your deposits in tandem with your exploration potential as an optionality play. You were cheap then, you remain cheap. So you're valued at less than $10 an ounce in the ground. And for a developer, that is very, very cheap. And so I'm a shareholder for that reason. Once you become a producer, you're going to get revalued a lot higher. So I really like the risk reward. So Corbell's is down the road. You'll get to it eventually. So right now you're going to start with RPM. So RPM, I have you at 1.5 million ounces at 1.2. That's a pretty darn big mine. Is that the right? Is that what you're currently at?
Yeah. So that's about right. So about 1.7 at 1 gram. I think it depends what cutoff you use, of course, right? But something around that. That's correct.
Right. So that's a pretty big mine all by itself. And your market cap right now, fully diluted, is 66 million. So we're getting Corbell for free. We're getting Stibium for free. And the RPM mine alone is worth $500 million and you're valued at 66. But RPM, like you said, the economics work. The capex isn't that high. I mean, a lot of companies would love to have 100 million capex. Even if you go to 150 million capex, companies would love to have that. It's hard to find, 50, 60, 70,000 ounce a year projects with a capex of 150 million or less. So your capex is low. Plus, the thing that excites me is you just said that you think that you have a 1.7 kilometer strike that's 50 meters deep that you think has 1 gram. That's going to expand your pit. So how wide is it? So you say it's 1.7 long, 50 meters deep. How wide is it?
About 250 meters wide, 300 meters wide. Yeah, it's like a snake. You can tell it's so obvious that it's just eroded off that RPM North high grade pod right on just a snake that comes down.
Have you drilled any of it?
No, we haven't drilled any of it yet. But we see, it's just the surface sampling is defining that anomaly, and we see the rocks in the crushed material, the eroded material. We see the veins and the mineralization in those rocks.
How many meters deep are you going to drill it?
So we'll use our RC rig, which goes to 100 meters.
So you might end in
ideally we hit bedrock and we maybe test the first meter or so of bedrock and we test the whole column.
Right. But it could go deeper than 100 meters. You're not drilling very deep. 100 meters isn't very deep.
Look, it's minimum. I mean, we think we might do a geophysics survey out there to see, but at the face of the fill, it's like an old it's an old glacial kind of rock glacier where the glacier deposited this material. And so at the face of it, you can see where the face of the fill, it's 50 meters. We measure it. Now, as you go up closer towards the deposit, we've drilled there down in the valley as a part of our valley zone, and we see it like even 70 meters deep.
Right. So that's pretty exciting. Definitely going to add some ounces for sure. But it's already a big mine. So RPM is very, very exciting. So how long is it? When do you think you're going to get the permitting done? You said the DFS will come out next year, and the last step's going to be permitting after that. So when will you complete permitting on RPM?
Okay, let me clarify that. The PFS will come out next year.
Okay.
We're trying to get it out next year. We're doing a lot of metallurgical test work right now, and so how that process, like I said, is kind of iterative. So if certain things pop up that we need to test, so a definite month or something that is coming out. We're trying to get it out by next year. As part of that metallurgical test work, we've done some heap leach test work. So there's the high grade material at RPM, and then there's a lot of that tonnage comes in lower grade material, like let's say 0.5 to 1 gram per ton heap leach type grade. And so we'll be able to capture that. The preliminary results already from the heap leach look very, very good. And so we're doing a little bit more test work with that. We've also looked at ore sorting, and at ore sorts, so far the preliminary test work on that looks very, very good. We're doing another larger bulk test now. So all these studies we're doing right now, to get that PFS out and make it as robust as possible. So it is a PFS that we're trying to get out next year sometime. And then at that stage, we're well advanced with our environmental permitting, and that includes wetlands mapping, the annual fish surveys that we're required to do. That's a big one always. With the salmon, we don't see any salmon up there. That's always the big one. No salmon spawning areas, which is a big bonus. That was the problem with the Pebble project like that. We've done rock geochemistry. Results from that look positive. We see neutral to acid neutralizing rock types in some areas, which is a big one. And then hydrology, of course. And this year we want to drill a couple more two or three more hydrology holes up there at RPM to get all that environmental studies completed to be able to submit for permitting once we'll be ready for permitting once we deliver this PFS to the market. We'll be in a stage where our data is such, some of this data takes 12 to 18 months to then model it, and you have to have it at a state to be able to submit for permitting, the permitting application. So let's say PFS by 20 PFS in the next year, then that permitting will be able to submit. That's 12 to 18 months being on state land, we think. So now we're into 2028. And then at that stage, we'll be able to, get the bridge finance, the construction finance, and things like that.
So maybe construction in 28 or possible, or is it going to go all the way to
possible? Yeah. Possible.
Yeah. So this is definitely a long-term investment for people, but it's going to get really exciting at the end of the decade. So the key here as your developer is your insiders. So, that's one of the reasons why I hold the stock is because the sharks are going to be circling you. They're going to basically looking at Corbell and they're going to want Corbell. They're going to be circling you guys, but you're not going to give your company away, right? I have you at 40% insiders. So basically you're going to tell it, no, we're not for sale, right?
Right. So that's not our core strategy. We're not here to flip the project. We're an aspiring producer. We're project builders, our team. I've been doing this business for 30 years all around the world, taking resource stage projects and bringing them into production. Long list of those. So yeah, everything's got a price, right, Don? But certainly, there's not many, I should mention. So we'll grow ourselves our own cash flow, or we would consider a strategic partnership, like a Donlin situation where Barrick and now John Paulson's in there, some kind of JV, because they can really ramp things up. A larger partner, they got more human resources, more capital to ramp things up. We get this will be our biggest season yet if everything transpires as I've described, with 5 diamond rigs and the RC rig. But in years past, the most we've ever had out there was 3 rigs. Last year I only had 1 rig going, and so they would ramp things up, get 10, 12 drill rigs, because there's not many projects like this left in the world. District scale play where you'll be out there for decades and decades, multiple mining centers producing multiple commodities. And it's the type of project that's why the majors, the mid tiers, we're on their radar. They're getting into our data room, some of them. And I think, we're not
right.
Here.
But I think gold's going to $5,000. And so companies like yours, they're going to be worth, mega multiples of what you're currently valued at. I have your free cash flow north of 500, once you build Corbell, north of $500 million. And so if your free cash flow is over 500 million, you put a 20 multiple on it. It's a $10 billion company. And
right.
So if somebody wants to come in and do a JV deal, sure, people would love to do it, right? It's fantastic if you let them in the door, but the only way I would do it is if you get your free carried, to production. It's like you pay
right.
for the capital. We'll give you 50%. You pay for the whole deal. That's
right.
the only
well, I say we'll consider it. Like we'll talk. We'll talk about that and consider something like that. Will depend. Devil's always in the details, right?
Yeah, that's really the only deal that I think would make sense. If you're thinking long term, you're thinking about the value of the company. Like I said, I think the company's going to be worth $10 billion. So you can't give all that value away. But if you kept half, it's worth $5 billion. But the other guy's going to get $5 billion too. So it's like, what are you giving us for $5 billion? you can't just, it can't be a normal JV where you're carried to a construction decision. That doesn't work. I don't think. It's like you're giving away too much.
Right. Absolutely. Absolutely. Like I said, our core strategy is not to like flip or sell the project or even, get a JV, but we would consider a strategic partnership, some type of, where we don't lose control of the project, basically, is what I'm saying, right? We don't lose control of the project. That's that's the goal. And we discussed their best case scenario. We could be constructing there in 2028. But again, back to that, the antimony, which also has gold in it, and we're going to start those rigs turning here. We'll put a couple of holes into stibium on our way to our RPM with one of those rigs. That has the potential to be not only antimony producer, but also our first gold in a very short period of time.
Right. And the other thing that's nice about that, if you get revenue, if you get free cash flow from stibium, that can actually help you pay for your permitting and your DFS, where you don't have to dilute people and dilute the shares. So that's really beneficial. If you can get into production next year, you already have $8 million in cash right now. You don't need to dilute that much to get to RPM construction ready. It's like, how much money do you need to get RPM construction ready? I'm a really big fan of Alaska, by the way. I mean, I'm invested in International Tower Hill, which I think is a fantastic project. Invested in Free Gold Ventures, which I think is fantastic. And then I'm a big fan of Alaska. I think Alaska is a pro mining state. I think of Alaska as perhaps being the most pro mining state of all the states. And so, I mean, we're starting to see it's becoming more difficult to permit in the lower 48. Right. I think it's easier to permit. For instance, Pebble, I'm convinced Pebble will get built because the state of Alaska wants it built.
Right. And the shackles have been taken off, with the tailwinds of the new administration, and you can see it, you can feel the vibe here, and things actually happening on the ground. I mean, things we've permitted, the state has turned those around. I'm talking about roads and some tracks and things like that. The state has provided those in very expeditiously.
It's fascinating what's happening in Alaska. Alaska, in many respects, is becoming more mine friendly than Canada. And Canada has always been like a mining country, if you will. But you guys are becoming a lot like Western Australia. Western Australia and Alaska, to me, those are like the last frontiers of pro mining.
It's a resource economy. Look at the economy here. So where does all the employment come from? Government jobs, military, and most of it, and resources, and some tourism, but resources, fisheries. That was one of the problems with Pebble, is like it's downstream is the Bristol Bay, and of course, two pillars of the Alaskan economy clashing each other. So we don't have that issue, but oil and, certainly the state now that, like I said, the shackles have been taken off. That's our future. That's our future. That's how you create really good economic growth and the type of jobs you can build families on, right?
Right. And once they greenlight Pebble, which I think is coming, once they greenlight Pebble, I think that's going to create a little throughout the entire state. It's just going to, you're kind of that what I'm talking about, the pro mine is going to reverberate across the whole state once Pebble gets under construction.
For sure. Yeah. There's no doubt about it. It's already happening. The governor's driving this type of project big time.
Yeah. And I just invested in Silver 47, which now they're drilling that silver project. So yeah, I'm absolutely excited about Australia. So I'm glad I'm invested in your company as well. It's like, I'm all about go Alaska, go.
Come on up. We'd love to have you.
I was there last summer. I was at Anchorage and Kenai last year. I have a friend that lives in Kenai. So yeah, I'm definitely rooting for you guys. It's the
other thing.
The one thing about investing in gold mining companies, you got to be patient. It doesn't happen overnight. You got to be very, very patient. You got to think long term and just be very patient.
If it was that easy, everybody would be doing it. And the old saying goes, mines aren't found, they're built, right? You got to build them from the ground up. And, you have to overcome those technical and permitting challenges and technical challenges. Every operation is different. And that's certainly what we're doing. De-risking things. And, companies like ours, like you said, you got to be very cognizant of the dilution. And, it's all these kind of moving parts. And I think we've come a long way. And we just think in about 5 years now, we've defined everything we've spoken about today, and we've only scratched the surface. The potential out there is huge, and the benefit we have in terms of exploration, our discovery cost is quite low because it's mostly outcropping out there. It doesn't require just yet expensive, deep searching, complicated exploration techniques. How do we explore? Geologists, boots on the ground, old school. And we see this stuff right on the surface and we sample it. And that's how we generate our targets. And then we follow it up with our scout rig, which we'll be doing some of those this year. And then, potentially hopefully that leads on to the next resource drill out, which I'm thinking Stibium. We have big hopes on that one. Stibium will be one of those, not only in terms of antimony, but also in terms of gold.
Right. Yeah. One thing I wouldn't, as a shareholder, I wouldn't be wouldn't upset me that much is if, after you get Stibium up and running and your company, jumps in value, like, I don't know, gets to 200, 300 million, you become basically a big player, a solid player. At that point, I wouldn't mind if you merged with somebody, kind of a merger of equals, to build Corbell faster. I wouldn't mind that, but I don't want you to do anything until RPM is up and running.
Noted.
Get that five bagger and from first before you do a deal.
It's coming. We're on the cusp here. We got a few catalysts coming up, so it's coming up.
I think once you put that PFS out, it will be downhill at that point. It'll just be, we know exactly what we're doing. You'll see the finish line.
Right.
Yeah. Once that PFS is in the door, you see that finish line, because at that point you'll be close enough where you'll get a good idea of the cost. How much is it going to cost to build? What's the economics on the project? And you'll see the finish line.
That's right. That's right.
That'll be very exciting time. So
yeah, we're focused on in terms of like construction finance and funding and things like that. I mean, we have a lot of groups that are ready to go. They're just waiting for that PFS, right? They're just waiting for that. And then they're ready to provide that. So I think we have all that lined up pretty well. Just need to get that finish line.
Absolutely. Thanks for being on the show.
Thanks for having me,
Chris.
Do it again sometime.
It was great to hear more about Nova. And again, the ticker is NVA in the States and NVA in Canada as well, correct?
NVA in Australia, ASX.
Australia. Okay. Yeah. ASX. So market cap, Don, you said around 66 mil?
Fully diluted. Yeah. 335 million shares, fully diluted.
And the share price, I saw when I really close to the close that it was around 1160, 1170.
Well, yeah, it's kind of hovering around $12. And we've been kind of in the doldrums here because we got all our news flow from the results last year in February, and there hasn't been too much, but we're starting now with the drill rigs turning. So watch that space, keep NVA on your radar, and the news flow will start to flow.
Yeah, I think the timing could be really good. You've got Beaver Creek and Denver Gold in September, and you'll have a lot of those results back by then, I would imagine.
Indeed, some of them, yeah. So we plan to, drill through to October, November even.
The share price is 20 cents US, by the way.
No, it's 31 cents Aussie, and then
right, 20 cents.
20 cents.
Yeah.
I think you're looking at, there's an old OTC listing there.
Okay.
Yeah.
So
that's not. Okay. The new ticker is NVA, Don, in the States.
NASDAQ.
Nancy Victor Apple.
Right. So it's so you're trading, what's it called in the US? I forget.
ADR. It's an ADR.
Oh, an ADR. It's an ADR. So it's like 100 shares.
60 to 1. 60 to 1.
60 to 1. Okay.
60 to 1. Okay.
Yeah. And the way you do that, So the way you do that, you take the U.S. share price, like $12, you divide it by 60, and then you divide it by the exchange rate, which is around 0.65 or something right now, and then that should be the Aussie share price. And hey, there's a little bit of arbitrage there. Some people complain.
Right,
that's true.
But if you take the Aussie, if you take the true price on the Aussie, it converts to 20 cents US. If you convert your actual shares, if you look at the actual shares outstanding on your company, because it's 60-1, but you look at the actual shares, it's 20 cents US.
Correct. Yeah, if you just look at the exchange rate, right? That's right.
Okay. Well, Chris, thanks so much. It was a pleasure to have you. And Don and I will summarize from here, and we'd love to have you back on again, maybe later this year.
Sounds good. Looking forward to it.
Thanks, Chris.
All right. Bye.
Don, tell us a little bit about your thoughts here.
So, it's a long-term investment. You got to be patient on this one. The key here is going to be what happens to these development stories when we get into a mania. And so back in 2004 to 2007, you had a lot of these developers were just ripping higher. And I think that could happen again. And that could happen for a company like Nova Minerals. If we see these development plays all really starting to rip higher, like right now, they're valued, I think, like $50 an ounce, $55 an ounce in the ground is the average of the developers. I think it's going to go to 75, but it might go a lot higher than that. And these guys are currently at 10. So if they can get valued north of $50 an ounce in the ground, they would really start ripping. That's a possibility. It's hard to predict how investors are going to treat these guys as they advance RPM. But I think the RPM PFS that comes out now, it's not going to come out, and you said till the end of 26. So it's a long wait for that PFS. So I think the stock is going to kind of be dead money for a while. I don't think it's going to really take off here. There's no drive.
Here's where I would interject, though, differently, in the sense that with a NASDAQ listing with an $11.70 share price, you're going to attract a lot of big money with that in a hotter market, right? Like you were saying, a lot of ounces identified. I'll just take Collective Mining as an example. They attended our conference. You might have met Ari Sussman last year in October. I know you and I had talked about him a month earlier. We had both seen him in Beaver Creek in September of 24. Stock was at $3. I mean, they uplisted to the NYSE, and now the stock, I haven't looked at it recently, but it definitely crossed 10. And these guys were talking 10 to 14 million ounces of gold. So if Nova NVA's got 10 million ounces identified, what's to say they don't get re-rated is my point. People are looking for good listings. One of the biggest complaints I hear from my clients, especially financial advisors or hedge funds or private equity, is, man, there's no liquidity in this thing. And I was talking to Ari about that at the October meeting. I said, you really need to get a market maker on this thing, because just because you're on the NYSE, I'm watching this thing. It's at $3.30 bid, $4 ask. No one's putting an order into this if you're a broker, right? Yeah. And then it got tight. The spread tightened up, and now the stock just went ballistic. A lot of times it's the what exchange you're on, how much liquidity you have, how can you get more people into the story to generate that tighter bid-ask spread. I mean, one of the knocks on Nova is that I looked at it today. It was trading 11.50 by 12. And so sometimes, that again is a little bit of a distraction, but I've seen it with US Gold, which we both like, right? When they got onto the NASDAQ with USAU, their ticker, it wasn't immediate that spread got to like 10 cents. It took a while.
Right. Yeah, you make a good point about having a good listing. So they're on the NASDAQ. So once they do get that PFS out, I think that'll be a game changer for them. Yeah. So even if you buy now and you might kind of dead money for a while, at a certain point, this stock should, because they have that Corbell that's just sitting back there waiting for them that you're getting for free. And Corbell is an 8 million ounce project, but the recovery rate is probably going to be a 5 million ounce open pit. 5 million ounce open pit's a big mine. It's 250,000 ounces a year. And then if you add RPM, another 100,000, they're going to be a 350,000 ounce a year company. as long as they don't sell, if they can hang on to their projects. But on Corbell, I mean, back to RPM. So we're probably not going to see construction until 28. So it's a long wait for this, 2029, 2035, we're 5 years out before this thing. And then you're another probably 3 years out after that for Corbell to get into production.
I think that all makes sense to me and it aligns with what Chris was saying. But what people are missing here is the antimony piece, because you can get into production much, much faster than people think. Because I've been talking to I used to live in DC. I helped put a conference on in DC right around the time you and I started to do this show about 2 years ago. And honestly, the feedback from CEOs like Chris was amazing. They were like, wow, I didn't realize that the US government is starting to get on board with this narrative. This was during Biden. This wasn't with Trump's EO in place. Now it's like a frenzy. You could kind of tell from Chris's enthusiasm that, hey, I've been working on this 18 months and we're close to the finish line. That's kind of that's how I interpreted what he was saying. And if that's the case, I don't know what kind of number you get, but you're bigger than Fireweed, or let's say you're around the same size as Fireweed. They got 35 million bucks. That's free money, and that stock just started to take off after that. It was languishing, before that check. And now people are like, oh, wow, okay, I didn't realize that this is even possible. Yeah. And so that's where we're at.
Yeah, I'm kind of downplaying the antimony because I don't know what the free cash flow is. I'm in the dark there. Sure. And so I don't know if it's going to be, if it's 20 million or more a year. If it is, then that could be a game changer. But if it's 10 million less, if it's a small mine, if it's only 5 or 10 million, that's not really going to move the stock that much.
Right.
So I don't know the size. He said it's going to be a fairly large mine. He was talking about 5,000 tons per day, I think. That's pretty big.
Take a look at Mandalay. I don't know if you own that, but I started to buy that.
I own it through Alkane now. They've merged with Alkane. Okay.
Yep. So I started that around $1.25. It's around 360 MNDJF. They have one of the best balance sheets out there. 80 million in the bank, cash with no debt, and they are the largest North American antimony producer right now. They're not in the U.S., but they are in a safe jurisdiction producing antimony, and that's a good proxy, I think, for NVA. Is like if they can become something like Mandalay, they're going to get re-rated.
Well, Mandalay just got acquired, so they're going bye-bye.
Well, right. They're going to merge with Alkane, and yes, I mean that's anytime
but I like
that happens.
I owned Alkane, so I really like this merger.
Yeah, I think it makes sense. I talked about it with Paul Harrison.
I've been really lucky on mergers this year. So I like the Mag Silver takeout. I own both of those and went to PayS. I didn't own Mandalay, but I owned Alkane. I really like that. I like the Gatos deal for First Majestic. I own both of those, but improved them. And then Silvercrest, I own both of those. Yeah. So I really like these mergers are helping me because the companies that are buying them I own, and they're getting better. It's usually always the buyer that it gets better. It's rarely the seller. And so, so far so good on these mergers. Hopefully it'll just keep working like this.
Agreed.
But, so, well, I think.
Why don't we leave it there?
Yeah, we'll leave it there. But yeah, I mean, if you're thinking 5 years down the road, if you want to do a 5-year bet for a 10-bagger, I think this one definitely fits that. I think the risk reward is there. They have really strong insiders, valued at 66 million, sitting on 10 million ounces of gold. If they have a recovery rate of 75%, it's 7.5 million ounce, 7.5. That's 75 million, $10 an ounce. So if you can buy a developer for $10 an ounce, that's a great entry. So yeah, I'll leave it there.
It is. And a lot of times you're doing that with a junior that has no liquidity, right? And so this is the difference with the upgraded listing. Sure, it costs them more to have an upgraded listing, but Chris pointed out they have 8 million cash in the bank, so it's not like they're going to have to do a raise right around the corner, which I like too. So with that, we'll leave it there. Don, always a pleasure. And we'll see you next week when we record again. And thanks to all our listeners and clients for checking us out at our various conferences. I will mention this, and we'll mention it on the front end, Don, next time, because I think we both deserve this. We both got named speakers at Beaver Creek this year on day one, which is September 9th. And we're excited to do that together at the show. So I'm looking forward to that.
Yeah, it's going to be a lot of fun.
Yeah. All right, Don, thank you. And thanks all of our listeners and clients checking us out today. We'll have our details in the following page if you want to contact us, and take care.